Well, we've had a number of companies report full-year earnings this morning, and joining us at the desk first up today is Francois Duplessis, Director at Vega Asset Management, and also EOH's CEO John King. Of course, that on the back of the company reporting as well. It reported a 29.1% rise in full-year headline earnings per share to 253.1 cents and declared a dividend of 70 cents, 32.6% higher than that of the previous period. Joining us for a look at the results, as I said, John King. Thanks so much, John, for joining us today. Just let's get into the headline numbers here. We've got revenue up 50%, and that looks certainly impressive on a headline basis, but we've got to take into consideration that the year has been as much about acquisitive growth as it's been about organic growth.
Thanks very much, Alishia. Good morning, everybody. If you look at EOH's strategy, and our DNA is really that we grow both organically and through acquisitions. And it's no different this year from previous years. In fact, if you look at our growth, the 50% growth in revenue, half of it has come from organic growth and half from acquisitions. So our organic growth is about 25% and our acquisition growth is about 25%. So it's very much in line with the way that we operate. We're trying to fill the spaces that we want to be able to offer our clients the right services. So nothing's changed.
How does your expected growth correlate with what's happening with the consumer? We were talking earlier about consumer spending dropping in the second quarter, 2.9% growth to 3.1% in the first quarter. How much is business to business? How much is indirectly or directly consumer related?
I think most of our business is obviously with business. We obviously find that we are gaining some market share in two different perspectives. A lot of our clients are starting to outsource their services to service providers like ourselves. So rather than doing the IT services themselves, they're giving it to companies like ourselves. So that's obviously increasing the revenue. And we are getting some work from our competitors. But overall, the IT sector grows at a faster rate than the normal general economy, which is probably about 6 or 7%. Our organic growth is probably 3 times that.
Mm-hmm. Francois, you got it?
Yeah, John, at this stage, 25% of your turnover is derived from the public sector. What kind of percentage of profit after tax is derived from the public sector?
Very much the same as the other areas. You know, we don't make huge distinction in terms of the public and the private sector in terms of the way we go about doing business and delivering the service. Obviously, we need to make sure that we do things appropriately. But we found that if you deliver a top quality service into governments with a properly defined spec, there are never really any issues. We did see a big growth last year with the managed services business when we acquired TSS-MS. We've also, in terms of the recent acquisition of Siemens, that also has a public sector element in it. We see it from two perspectives. It's good business. It also helps us from helping the country deliver a better service to the citizens. So if you can combine basically a do-good type scenario in terms of service delivery and also make a healthy profit, that's also good. And we've had people have concerns about bad debt write-offs and all that sort of stuff. We've had none of that. In fact, our debtors days overall has decreased from 69 days to 64 days.
So let's look at what price this is all coming to the consumer at, whether it's in the private or public sector, and just how much pressure your margins have come under, or have you been pretty lucky in that regard?
I don't know if it's about luck. It's about obviously delivering a top quality service. We're a knowledge-based company, so we're not a typical IT company which develops software and that sort of type of stuff. We deliver services, we deliver managed services, we do implementations. In fact, you would have seen our gross profit margin has actually increased from 37% to 42% over the course of the year. And that's in line with our strategy of looking at services. I think gone are the days where you can rely on software and hardware sales to make your numbers. Those are both becoming commoditized, especially in the areas with cloud and those sort of types of things, and a lot of everything's as a service. It's about knowledge-based services and delivering top quality services to your customers, and there you can charge reasonable rates.
Francois?
And you mentioned that you have Africa also on your radar screen on the expansion side. Any specific countries you're targeting?
Look, from an Africa perspective, we're cautious in terms of Africa. I think people are incorrect in looking at Africa as Africa. So we look at it as a country-by-country basis. We are looking in both West and East Africa. We're looking at potentially a hub in that particular area. But there's no great pressure. We believe there's a huge amount of opportunity in South Africa. If you look at the market, the IT and the BPO market that we're in, that's a 200 billion rand market. our turnover is 4 billion. So we're only minuscule in terms of that, so we can hugely expand here. So at the moment it's more opportunistic. We follow our clients into Africa, but we are doing research, but we're not going to bet the house on it.
It all just sounds a wonderful story, but there must be things, there always are things that chief executives and chief financial officers have to worry about at night. What are the things that are on your mind, clouds on the horizon?
Funnily enough, I'm not too worried about a lot of things, because if you look at our annuity base, our annuity revenue is in excess of 50%. So I'm able to sleep fairly comfortably at night knowing that a lot of work is in the shop. Managed services has increased significantly over the period. There is the whole cloud offering, which is obviously important. We're ready for that. We are delivering that service both from a private and a public cloud perspective. It's simply another channel to market. We see that the uptake will be varied. The large enterprises probably won't look at public clouds for a while. But really, we offer such a great end-to-end solution. We have over 3,500 clients. We have no single client or a single cluster of clients that make up a huge percentage of EOH revenue. So it's tough out there in terms of getting business, but we're doing okay.